All right. Good afternoon. How's everybody doing? Yeah? You all right? Ready to wrap things up? Some hot stock picks. Everybody want some? Feed the animals. All right. We did not pick this topic, the title of the topic, I might add, because stocks I love right now, because they say you're not supposed to fall in love with a stock. And I absolutely agree with that. Every time I seem to think I love a company or love a stock is exactly about right when I should sell, because things turn sour shortly thereafter. So we're gonna, before we kind of get into specific companies and stocks, we're gonna kind of talk about that theme. And obviously we have Jamie Keach here from Resource Insider. We've dusted off Brent Cook once again to give us some thoughts on what he's doing. But maybe Brent, let's talk about that theme about being very careful falling in love with an equity in your portfolio. Why is that a dangerous proposition?
Well, honestly, the only stocks I love were the ones that made me look smart. But I, in more general, how many of you were at Rick's session where he picked his favorite stocks? That was interesting. He picked about 22 stocks of companies that are here. And I saw, much of the audience just scribbling down the symbols and such. And it occurred to me that this is really not the way to invest. And when I worked at Rick's office there, the stock brokerage, I would see these people with, 50 to 100 stocks in there, and that's how they got those stocks. And the thing that Rick did is every time he talked about one, he could tell you why he owned it. And I think that's a mistake that a lot of retail investors make, is they write down the stock, that's a good idea, and don't do the follow-up due diligence, because we know that most of these are going to fail. So our objective here is to get out before it collapses, and stick with the good ones, but keep track of what's going on.
Well, Jamie, your job is to do that.
I know, I'm really good at it. Why not fall in love with a stock?
Yeah.
So, because mining companies are not real businesses, they're levered bets on commodity prices. So mining companies are not the kind of stocks you should hold forever. They're the kind of stocks you should buy at cyclical bottoms and sell at tops. So if you fall in love with them, you risk holding it through the cycle, which is how you give back all your profit. So that's why you shouldn't do it.
So where are we at in the cycle here? I mean, the gold, obviously the metals prices are rising, but the trickle down into rising equities hasn't necessarily hit the entire boat of junior exploration equities.
Can I actually answer that with a question for you, Brent? So you did something I thought was really interesting. In, I think, 2015, you wrote an article. And I can't believe everything you read on the internet, so tell me if I've got this wrong. But where you kind of talked about the last big bull market as like really a once in many generation kind of opportunity, where you had so many new countries opening up, and there's so many deposits that you could kind of walk over to and kick a rocket side and find a new porphyry copper deposit or a new gold mine or what have you. We're not in a place in the world anymore that's opening up. It's probably shrinking, and the discoveries left to be made are deeper and harder to find and more expensive, in my view. How has that changed how you think about these cycles? Because, sorry, I'm hijacking your conversation here.
Hijack away.
Because I don't think this cycle we're going to have is going to be anything like the past cycles. And I have some thoughts on why that is too, but you've been doing this longer than I have, so I appreciate your opinion.
I would agree. I think this is not going to be, and first, I am pretty dang positive on the precious metal prices. Copper, base metal, I don't know what's going to happen. I see at least 4 years of utter chaos. And we're seeing around the world change, and we're seeing a lot more countries nationalize or increase taxes, etc. That's a negative too. So the areas we can look is shrinking now, and at the same time, as you say, we've discovered most of the things we're going to find at surface, unless it's in the middle of nowhere. So it's going to take more money, more time, more patience to find these things. But if you can identify a tier 1 deposit early on, I think that's a guaranteed win.
Yeah. So, how many of you guys own houses here? Own a house? And how many of you have owned it for, say, more than 20 years? And how many of you have houses that are worth a lot more today than they were 20 years ago? And how many of you did fuck all to improve that house or invest in it and it just went up in value? A lot of you. So you got the world's greatest trade, which was the declining interest rates trade, where every asset in the world was worth more and more and more and more and more and more and more, and you just didn't have to do anything. And that also happened in mining assets. And that's why junior gold companies, which don't really do anything, had a run of going up just because they own the assets. But now we're in a rising interest rate environment. And today, houses aren't just going up in value for doing nothing, and either are mining companies. So you ask, why have we seen gold prices run and gold equities not? Well, we have seen senior and mid-tier producers go up. What we haven't seen is the junior equities go up at all. And I think there's a decent chance we will not, unless they can do what you just said and make a real discovery or build out an asset or some way add a lot of value. They're not just going to go up because they own something and they're sitting on it. That's kind of my view there.
It's a great point. And maybe we start breaking this down. And since you mentioned mid-tier producers on the precious metal side, maybe we can provide some ideas of companies that we actually like in this space. Just ideas. And you may own it or you may not, but maybe just say what you're looking at, why that company is maybe worth proper due diligence on everybody's part.
Well, you want the geologist to do it. Right. I guess I'm sticking with the same theme. Tier 1 deposits are going to be acquired. They've got to be acquired. There was this, someone gave a statistic the other day on one of the big panels that gold reserves are down 40% globally over the past 12 years. That's kind of right, but what they left out is that those gold reserves are at a much lower gold price. You bring the gold price, they're basing their reserves up to 2,000 or 2,100 or whatever, they're going to add a lot more reserves just like that. So again, it's got to be the tier 1 deposits, which are the low or the high margin deposits in a reasonable jurisdiction without too much capital. And I've got a list here of some that I like a lot. Rupert Resources in Finland. They've got a nice open pit deposit, 4+ million ounces at 2.7 grams. Great deposit. Someone's going to buy that once it's consolidated. And there's a side play there with Orion Resources AU. I'll throw in more. They're here. Vizsla Resources, fantastic deposit. The best silver deposit, not owned by a major. Someone's going to buy that someday. The exploration potential there is way big. I'll just do those two. Let Jamie go on.
What do you think of Mayfair? Do you own that one?
Don't own it.
No? We bought it recently.
Okay.
Yeah. So Mayfair, gold asset in Ontario. It was originally a Pan Am asset. It got pulled out of there. The resource has been expanded. They were doing a pre-feasibility study. We bought it when shareholders went activist on it and kind of rolled the board because we thought they were going to build out the team there and maybe be a little more disciplined with spending. That's one I like. But again, this is a non-producing asset. You'd be buying this for expansion of asset, metallurgy, and moving towards production.
Well, I asked for producers, and you both gave me developers, so I'll throw in.
I don't own any producers.
Well, let me jump in there. And something in my portfolio, one of the best performing assets I had was Calibre. And during kind of the Nicaraguan debacle, geopolitical debacle with the Biden administration and the president of Nicaragua, there was a lot of fear selling, and I ended up buying that dip at 66 cents. And now it's at 2 something. So that's a really nice trade. I took some profits on the way up, but we talk about tier one deposits. That Valentine project that they bought from Marathon Gold will be producing this year. All things go well. So they'll be adding another asset to their production pipeline, which I think is going to be incredible. They put out their production numbers last week, I think it was, and them, like a lot of peers in the mid-tier production space, are just raking in cash. That's all I got.
So, okay,
All right.
producer. I have one producer in my portfolio right now. It's not a mining company. It's a natural gas company. So, one of the best things we ever did in our newsletter was start buying uranium stocks at $25 a pound uranium. And we sold them last year when it was worth a lot more. And that was a really easy trade when you could see that the commodity price was so cheap that they were never going to build a uranium mine again anywhere in the world. And we kind of recognized a similar situation this year in natural gas. Anyone in this crowd invest in energy? There's a surprising little overlap between mining investors and energy investors. So gas was trading at around $1.90 an MCF. The average price of drilling a well in the United States is like $3.50 an MCF break even. So that means there are no wells ever going to get drilled again in the United States at that price, or gas has to go up. We bet on gas going up, so we bought a company called Comstock. Do you own that one? Yeah. So Comstock is what I think in mining we would call like a torque producer, which is it's not the cheapest producer. So this kind of goes against Brent's tier one deposit theory. This was like a tier three kind of asset in some ways because it's a little more expensive to produce, but we figured it was heavily levered to gas price, and then gas price doubled, and then our position doubled in about a 4 or 5 month time period as well. So that's kind of one strategy if you're a little more being willing to trade a little more actively and take a little more risk, and you're thinking more on commodity price than asset quality, is thinking about those companies that need a move in commodity price to gain value, right? Because there's a big difference between being worth $0 and being worth something, and that can be reflected heavily in the equities. I mean, you all know, I think, who Ross Beatty is. I mean, that's effectively what he did with Lumina. He bought a bunch of out-of-the-money copper assets that no one wanted at any price, and then copper went up in value, and people wanted them, and he made a lot of money. So I think that's an excellent way to make money in the commodities market.
Yeah. Tier one assets in the making. My opinion, and I own shares of this company, but I'm also really paying attention to the development with Collective Mining down in Colombia. I know Colombia gets heavily discounted. People have jurisdictional concerns about the country's political concerns as well, but they have permitted mines. Marmato is right next door, and that underground got permitted right away. But what they have done drilling and defining Apollo, and what they've done recently with the drill rig and kind of coming at more perpendicular is really something to watch. I really think it'll be interesting next year if they put out a resource on the Apollo target alone. You could easily. I don't think it's out of realm to think that that's a tier one deposit in the making. Do you have any opinions about Colombia, Brent?
No, not my favorite spot to go investing. Great country, but no, I see nothing wrong with what you just said. Collective's drilling some fantastic holes in a reasonable place. Yeah, it's good.
Yeah, my one concern is, I mean, they're sitting about a $500 million market cap right now, and there's always kind of this level at $800 million. Like, it's really hard to bust above that. Snowline Gold's been there for a while now. Why is that? Why is it that $800 million market cap that it's always like you need a wrecking ball to get through it?
I don't know. Now you mention it, that does happen a lot.
Yeah.
I don't know.
Yeah.
I also do not know.
You don't know? You guys are supposed to be experts there.
I'm not experts at that.
What about on the copper side?
I got a good one.
Okay, go ahead.
Okay, so we own two, and we got them in. I did them both sort of for the same trade. So probably the best investment that I ever made was Solaris Copper, now Solaris Resources. So I used to work for a company called Equinox Gold. That was in the Equinox Gold portfolio. There was a really small financing at 25 cents, and then I think within 2 years I sold it at $12. And these are the kind of projects I really like, and they're pretty binary in terms of being really successful or not. And Solaris's problem was this was an asset, a porphyry copper deposit discovered by David Lowell, one of the most kind of winningest discoverers in history. But they hadn't been able to get on site for something like 10 or 15 years because of indigenous issues. There's a group called the Shuar, which are like literally one generation away from being headhunters that did not want exploration there. But I knew that company had hired a friend of mine who was a community relations expert, and I thought, there's a good chance he might be able to crack that nut, and they did. Didn't hurt that company's backed by Richard Wark, a very wealthy, very successful mining entrepreneur who has a track record of selling things for way more than they're worth, I would say, and I wanted to ride along on that, and so I did. But I sold it at $12, and they kind of traded sideways and then traded down. And then some of you might recall that recently a Chinese company tried to invest in Solaris, and the Canadian government somehow managed to claim security issues because it is a Canadian domiciled business, but all the assets are in Ecuador, and blocked the investment, which crushed the share price and was a very sad day for Solaris investors. But recently, Richard announced that they would be re-domiciling that company to Switzerland and replacing the CEO with the ex-head of copper for Glencore. And so I bought it on that news. And I look at this as literally the exact same trade I made before, which instead of access to the site, now it's just access to money, and probably the only money in the world that actually wants to build a mine in Ecuador. And so I'm going to hold that stock until the Chinese come back and offer another bid. And we're up, I think, 18% in, I don't know, 2 or 3 months, whatever it is. So far that's looked all right. What do you think of that?
I like Solaris. I also own it. I think Ecuador is coming around, and the move to Switzerland makes it acquisition for the Chinese. So I think that's a great play. I think my favorite copper deposit is Arizona Sonoma Copper. They're in Arizona. It's on private land. It's they've got the water. It's permittable. It's a brownfield site. They've got Hudbay put money in at a premium to the current share price. Rio Tinto's in on it, and this is the up-dip section of Ivanhoe Electric Santa Cruz deposit. So, and it's open pittable. It's doesn't need refining. It's a oxide deposit, so they can produce the cathode right there on site. So there's no need to ship it anywhere. So it's 100% American-made copper in a great location. I think that's the best deposit I know of right now.
Is it permitted? Where are they on that?
They're right down to the very end.
It's private
all
land.
the permits.
It's private land. Mm-hmm. It's private land. So
It's private land. That's correct.
What do you guys make of this Trump, I was going to call it an announcement, but tweet is probably a better term, where he said any project investing in capital of over $1 billion, he would fast track the permits. I think that could be real, because that makes like a lot of projects in the United States interesting.
I don't know if it's real. I'd rather them focus on permitting reform. And I think there's bipartisan agreement on that. It's not necessarily fast tracking, it's just making it more efficient. And I think they can make that happen pretty quickly.
How are you going to make America great again if you don't fast track?
We're already great.
Actually, that's a good point. We were already great, and things that make us great, I'm hoping we can keep.
Right. That's right. Fair enough. We were kind of talking out there on the foyer before this, and I kind of wanted to throw this general thought and idea of just where we're at with commodities prices, and kind of table the conversation around the equities, but think about where we're at with the rise in commodity prices over the last couple weeks. Leading up to this Trump presidency, a lot of procurement, a lot of buying was taking place leading up to that because of the concerns of tariffs, knowing that a lot of raw materials that they needed were probably going to go up in price once the tariffs are put in place. So there's a lot of buying month of December and through January. On top of that, and the tragedy of California and those neighborhoods and cities being wiped out by the fire, we will see what rebuilding looks like. But rebuilding requires resources. And it's going to be very interesting to see how this all fits in on the demand side for commodities, metals, raw materials, energy. If they are going to say no natural gas, every home has to be solar powered, yada, yada. We'll see what the Republic of California says about all that. But watching it closely and what it's going to take to rebuild LA and what it does to the physical markets is going to be a very, very interesting dynamic heading into this year and definitely beyond. That's a big picture scenario, but you kind of wonder if that could fuel the next level up in a commodity cycle. So I don't know if there's a question there or just kind of a poignant thought to kind of mull over and see if you have any.
I mean, I said this to you before. I think aggregates would be the most interesting thing you could buy for that, personally.
Yeah.
I think they're going to need a lot of cement, a lot of concrete. That's what I would be most interested in. Is that I don't know, and I truly don't know, if that's of a scale to like move copper or move, nickel or what have you. I don't know.
Well, and if you have to rebuild neighborhoods in the United States and you have tariffs, 25% tariffs on raw materials coming in from China, that just automatically got more expensive, and it already is expensive, right? So, I mean, I think it's just, again, this is kind of thinking big picture here, but I do think that dynamic is one to be paying very close attention to. And the copper demand for rebuilding is going to be just absolutely huge. So, I don't know. Brent, do you have any thoughts on that?
Well, it's sort of I listened to the experts here on the macro scene, and it's, the economy's going into recession, they're going to crash, the stock market's going to crash, yet commodities are going to go up. That dichotomy doesn't make a lot of sense to me in terms of, your base metals, copper, zinc, and that sort of thing. If the markets crash, my experience has been we go down with it. The difference this time, is that the one thing Trump's good at is causing chaos. And that's going to do, I think, really be real positive for the precious metals prices. So I'm real positive on those. I think longer term, copper is definitely got to get to a higher price, and copper deposits are going to be worth a lot more. But if we do go into a recession or worse, we're going to get whacked just like everybody else. We're not as lucky. We don't go up with everybody. We just go down with everybody. It seems like in our market. But anyway, that's what I'm thinking. So I'm going to stick with my copper plays, add to them if it drops, and keep looking for good precious metal projects.
Okay, I got a good trade. Can I just do it? Can I tell you the best Trump trade? Yeah, now that he's in office? Okay. So what's one of Trump's big sort of platforms? It's like drill, baby, drill, right?
Right.
So do you think you should buy oil and gas stocks then? No, because unlike everyone in this room who wants to see commodity prices go higher, everybody else in the world wants to see them go lower because they're just an input cost.
Yeah.
And that's what Trump's trying to do. He's trying to make them cheaper. So what's the best way to play oil and gas if he's trying to drill, baby, drill and make them cheaper?
Services.
Frac sand.
Yeah.
Frac sand. So in fracking, there are basically two ingredients. One is water, and that's basically free. And the other one's a high purity sand called frac sand. And that's the little pieces of sand that wedge open the tiny little cracks when they blast the rock that the gas or oil comes out of. Frac sand is one of the most cyclical commodities. Basically, every frac sand company goes bankrupt every decade or so. And we are at a cyclical bottom. And there are two publicly listed frac sand companies, which I don't own either of them, but I do have other frac sand exposure. One's called Smart Sands, and it's kind of a shitty company. So this is like a torque trade. And one's called Atlas, which is an excellently run company, and that's a tier one. I think frac sand is going to rip. And I think that, I don't own either of these companies, but I do own Fraxan. I do think that's an underappreciated way to play the drill baby drill thing. So that's probably my best takeaway.
Yeah, that's a good one. Brent, do you have any Trump trades other than your Trump meme coin that you bought?
No,
He's holding that bag. He's
don't.
holding the bag.
No, I don't. Well, actually, I think rare earths. I think if you can find a rare earth deposit in a politically acceptable jurisdiction that is an ionic clay deposit, which is different than the hard rock. The ionic clay deposits, Mother Nature has already weathered them down, so it's a much simpler process to recover. If you can find that, you're in good shape. And just coincidentally, I know one, Aclara, the symbol is ARA. They're in Brazil and Chile. Good deposits, way undervalued, and I think those two deposits can do well.